If you've been curious about what's happening in Edmonton's commercial real estate market in 2025, this video is for you. Today we'll break down vacancy rates, cap rate trends, and the top submarkets that investors are watching closely. Plus, I'll give you a real example to help you understand how these numbers translate in an actual deal. First, let's talk about the overall landscape. Edmonton's commercial real estate market has remained relatively stable, with industrial properties continuing to lead the way. Despite interest rate pressures, demand for well-located properties, especially in industrial and mixed use, remains strong. Vacancy rates are sitting at roughly industrial, around 3 to 4%, some of the lowest in Canada. Retail, around 5 to 7%, depending on the submarket. Office, still elevated around 18 to 20% downtown, with suburban offices faring a bit better. Now let's talk cap rates, because this is where investors pay close attention. A cap rate is basically the property's net operating income divided by purchase price. It's a way to measure return, not including financing. In Edmonton 2025, average cap rates are roughly industrial 6.5% to 7.5%, retail 6% to 7%, office 7.5% to 9% higher because of higher vacancy risk. Let's walk through a quick example so this makes sense. Imagine you find a small industrial warehouse in southeast Edmonton. Purchase price, $1,200,000. Annual net operating income NOI $84,000. To find the cap rate, divide NOI by the price. $84,000 divided by $1,200,000 is equals to 0.07 or 7% cap rate. This is a realistic industrial deal in today's market. Investors like this because industrial properties have low vacancy, longer leases, and stable tenant demand, especially for logistics and trades businesses. Now let's look at where the action is. Some of the most active submarkets in Edmonton's commercial scene for 2025 include Southeast Edmonton, industrial and logistics hubs, low vacancy, newer builds. South Edmonton Common, Gateway Corridor, retail spaces benefit from strong traffic flows. West Edmonton, growing demand for mixed-use commercial residential spaces. Downtown, still facing higher office vacancy, but some investors are eyeing conversion or repositioning opportunities. To sum it up, Edmonton's commercial market in 2025 is being shaped by low industrial vacancy, stable demand, moderate retail strength in key corridors, ongoing pressure in the office market, cap rates that remain attractive compared to larger Canadian cities, especially for industrial and retail investors. Understanding vacancy rates and cap rates helps you identify which asset types and submarkets might align with your strategy, whether you're analyzing your first deal or simply watching the market. If you found this breakdown helpful, make sure to like, subscribe, and turn on notifications for more Edmonton real estate insights. I'll be posting more educational content on commercial trends, strategies, and step-by-step guides for buyers and investors. Don't forget to like and subscribe to my channel.